Hello again, everyone. In this technical analysis of the stock market video, I call it day 43 because that's exactly what Friday was, the 43rd day after the March 23rd low that we had here. So we're going to try to put some perspective on that. We're going to look at the Dow Industrials today and check in on one of my other indicators that we look at every day. But before we get to that, just a quick reminder, if you'd like to have more of this kind of information, head on over to joehenches.net and check out the membership over there. Become a member. All right, so here's what's going on. We were down 8.96 on Friday. We've been just doing a lot of chopping around here over the last several weeks. And for the week, we're up 780 points. Okay, but look at the last 5 weeks. So look at this high right here. We closed 24,242. We closed 24,465. About 223 points over the last 5 weeks is all we've gained. Okay, just not a whole lot of movement to the upside in here. We've really been struggling. All right, so let's take a look at the daily picture in here. I'm going to get rid of that to the side. So here's what's going on, and I'm going to come back in. I'll drill down into the underneath within the daily intraday price action and talk about what I think is happening here with this ABC. Now, we haven't taken out this April 29th high yet, but the SP 500 has. And so I think there's a decent chance that we're going to push, especially the price action that we've had here on Wave C. So what are we talking about in here? All right, so the move down in March from the February high was 27 days, and from intraday high to intraday low is minus 38.4%. So the rally so far, as I mentioned, so far 43 days, and to the high on April 29, 57.7% retracement of this entire move down. Okay, normally on a wave 2, I'm looking for 50 to 62%. Okay, that's kind of the target zone. So could we continue to push a little higher? Yeah, we could, and we'll talk about that in a minute. But I want to put some perspective on this, so let's go back and take a look at 1929. So here's 1929. The crash was 49 days from intraday high to intraday low, from September 3rd to November 13th, okay? And it dropped 49.4%. Well, then it proceeded to rally all the way up into April 16th, the intraday high here, and the retracement was only 53.4% of this entire drop, but it took 105 days. So what I was trying to do is put some perspective in, we had a very fast crash, very fast move down in 2020, okay? They've said it's been the fastest to 10% down, the fastest to 20% down. So very quick move. It was 27 days, 49 days here. Now, it didn't go quite as deep, but it still went pretty doggone deep, okay? So now we're looking at, the kind of move back up in here. And what I wanted to do is say, well, this took 2.14 times what the move down took, okay? And it only retraced 53.4%. And of course, this was the high after the crash, and it proceeded to drop, continued to drop all the way down into June, July of 1932. All right, so here's the picture. Let's come back to present day. And so if we were to sit back and take the same time ratio of 2.14 times, we'd be looking at 58 days for this counter trend rally. We've already taken 43. So that means we could possibly, if we stayed in sync with the same kind of, symmetry that happened in 1929, we'd have about another 15 days of rally. Now, there's no guarantee, but if we did, it would be out into this zone here about June 15th. So right now, what I'm looking at is watching the internals and to see, what are we doing in terms of pushing higher in here. So here we're drilling in. Here's the ABC. Okay, let's get a little more detail. Here's the waves, 5 waves up, okay? And then we've got this zigzag back down in wave B. And now we're looking to see what are we getting in a wave C so far. So it looks to me like we had 1, 2, 3, nice gap in the strong third move in here. And then we're going sideways for wave 4. This could be all of C, or this could actually just be one of C. We'll see. We'll see what happens in terms of how it pushes out. But let's drill down a little bit more and look at this move sideways in here. So what I'm seeing, what I notice is three waves, three waves, three waves. Okay. So what that tells you is something else is going on. And I think a sideways triangle is going on here for wave 4. And I don't think it's complete yet. So we'll see what happens here on Tuesday, Wednesday. I wouldn't be surprised to see a little push up to complete D, and then we come back down for E, and then we make our push to complete minute wave 5 of C. And then we'll see where we go from there. But short term, this is what I'm looking at. One more push, and it's the same kind of scenario. It's not the same here on the S&P 500. It's not the same kind of pattern, but it's the same kind of scenario in terms of one more possible little push up in here. So that's where we're looking at here on the Dow Industrials. Okay, now let's take a look at one of the indicators I look at every day. The percent of stocks in the S&P 500 above their 50-day moving average. Look how we got so extreme down here, extremely oversold, way below 20%. These are percentages, okay, from 0 to 100, all right? And so here we're in this overbought zone between 70 and 80. We're actually been ticking above 80%. What's interesting, on Friday, we closed at 82.97% of the stocks in the S&P 500 were above their 50-day moving average. In the last 12 months, there's only been one other day that was higher than the reading we got on Friday, okay? And that was back over here on July 12th. We had a reading, let's see if I can get it to pop up. I could tell you, I'm looking at another window, 83.67, so it's slightly higher. Now, have we had other days, other time periods where there was a few more? Yes. I'm just giving you a perspective in terms of the last 12 months, and even looking at what we got up in here back in January and February, okay? You know, we're closing slightly higher, but we're bouncing around above that. So now what I'm watching for divergence showing up. It's starting to show up here on the RSI. I'll be looking to see when this starts to roll over. We're not quite there yet. I could see us chopping around up here in this overbought for maybe a few more days. We'll see how it plays out. Okay, so now I want to look at the corrections that have occurred in since 2009 to give some perspective as to why I think what's happening right now is the start of a bear market and not a continuation of the bull. Okay, since the peak in January of 2018, we've had a pretty messy, volatility that's been occurring here over the last 2 years, and it's been challenging to say the least. Now, I think what's going on in terms of the corrective pattern is what I've got labeled in here in terms of a sideways wave 4, okay, and it's a WXY. So we've got two corrective patterns, a zigzag connected by a 3-wave, connecting to labeled Y, but it's a triangle. It's an A, B, C, D, E triangle in here. Granted, it is a little bit unusual, a little bit out of the ordinary, but it fits with the 3-wave structures, and it also fits with the sideways type of picture in here. And a lot of times early on, we were looking, could this possibly be the end of wave 4 right here? And it just doesn't fit with the 3-wave in here, okay? So this is the picture that I think fits the best. And so right now, I look at this and I kind of compare and say, okay, well, how does this fit with the rest of I'm going to clean this up a little bit, get rid of some of that noise. With the rest of the corrective action that's happened since March 2009. Here's the moves, okay? The depth of the correction in here, they all fit. This was a little bit deeper percentage-wise, it looks like almost, but it just fits. This is wider. This took a little bit longer, but it looks like it's in the same ballpark, okay? And I love the channeling that occurred in here. Yeah, we did a throw over here in January 2018, bounced around, came back down into the channel. Then we were hugging the top of the channel, and then we sliced down through it like a knife coming through butter, okay, and just came right through the channel and broke all the way down through the bottom of it. Okay, so that's what I think is going on. Now, what are the bulls saying? The bulls are saying, no, wait a minute, not so fast. We got another bull move coming. Well, for that to be the case, this has got to be the corrective pattern they're looking at, a big, large, expanded flat pattern, okay, an A, B, C. The heartburn I've got with this is that this B wave really got very extended, well above what is a normal length B wave for a flat, okay? And so that's the first thing I had with it. But then when you start looking at how big this corrective pattern is, it doesn't even look like it's in the same ballpark as the rest of them. It just doesn't make sense. It just doesn't fit. The other thing I look at when I look at the severity of the corrections that occurred, look at how severe in terms of the pullbacks. We only got to about 35% on the RSI here. Here we got to about 26. Here we got to about the same, about 26. And then this move here, we're all the way down to 15. It's just much more severe. It really tells you something different is going on than anything that occurred since March 2009. So I think something different's happening. This is what I think is going on. And I think we're into the bear market. And what we're wrestling with right now is getting our arms around this move and looking at this price action, looking forward to roll over. Okay. That's it for this video. If you felt like the video was helpful, give it the thumbs up. If you're not a subscriber on the channel, hit that little subscriber button. And again, if you'd like more of this kind of information, head on over to joehenches.net. We talk about this kind of detail every day over there with the membership. Check out the membership. All right, everyone, have a great, I know everyone in the United States is celebrating Memorial Day holiday, and boy, it's really kind of depressing to not have the Indy 500 tomorrow. But anyway, I hope everyone has a great weekend all around the world, and we'll talk to you on the next video.